We as an accountant, our roles are facts and numbers. We're not making decision. We're not even recommending you a decision. We're very hands-on and we are equally very hands-on. And very hands-on in the sense is that we go deep into try to listen to the client. And very often we listen to give a solution as opposed to listening to understand. Where we also become hands-off in the sense that we're very mindful that we also don't become intrusive. It is client's decision. Individual circumstances are different that perhaps even we as an accountant, we don't know.
You're talking about commercial property. You need to get the financing to be able to afford the property, how much deposit you need. So there's often things that you go together with someone else. It's always good to have people that you can trust.
As long as we stay with the goal. Yeah. It's not about the peer group pressure. It's about staying with your goal and stay true to your goal, then success happens.
Hi, everybody. Welcome to another episode of the Investing for Doctor podcast. I'm your host, Dr. B. And today we have Mr. Munzurul Khan with us again.
Thank you very much. Thank you, V. Thank you for having me.
Welcome back, Munzurul.
Thank you.
As we all know, you are a accountant extraordinaire. All right. And you run a large accounting group. For the layperson, I guess an accountant is someone who files your taxes, right? But, as you and I both know, there's a lot more things that an accountant can do in contributing to their clients' careers, wealth, and all that sort of thing. Maybe let's start off with the bare basics, right? How do you define what an accountant does? Give us the most basic layers,
right?
Then the more advanced stuff,
right.
And then what you really can do for, say, the really high net wealth individuals.
Lovely.
So give us a little rundown.
Yeah. No, thank you. Thank you, B. Thank you. I mean, I suppose the accounting profession has been around over thousands of years, right? Like it goes back all the way to sort of 1600 when we had the debit and the credit side was being invented by UK. And that's where the accounting sort of came in. It's that double entry bookkeeping as such, right? But, over the years we sort of see and we say that, well, as many profession evolves, the accounting profession is also evolving. So you have your traditional accountant, as we call it, right? And traditional accountants are the ones who are a bit of a scorekeeper. So they keep the score, they do the data entry well, they do the recording very well, they do the compliance very, very well, right? And this compliance that they do it very well. And this compliance in terms of tax lodgements and lodgement of your business activity statement, doing your financial set of accounts, doing all of your statutory as well as the state-based requirement, all of your insurances, all compliance level of the work is sort of the traditional role of the accountants. Where I suppose we would like to see ourselves is that we say that all of those traditional compliance work, we need to do it. Everyone needs to do it, right? And we need to do it very well. We need to do it with accuracy and we need to do it in a way if there is a review from ATO so we can justify all of those. So everything needs to be substantiated, based as such. But a modern accountant, in my mind, does a bit more than that. Rather than being only the scorekeeper, a modern accountant is also the business coach. And this is where we take a bit of a step back and we sort of say, all right, we'll keep that score, but in an ideal world, how do we generate the score that we are after in an ideal world? And then we'll come back and keep that score. So you almost do it the other way around, is that you keep the score, but you keep the score that you wish to. That's where the strategic accountant comes in. That's where someone comes in who is a little bit of a bigger picture, right? And you sort of say at a basic level, intermediary, high net wealth individual. So sometimes at a basic level is that we say that perhaps all we need is the compliance. Do the returns,
and
do the returns well,
sort of
and do it reasonably well. Then you very quickly grow from that basic level. And I would almost argue that in the modern world, there is almost no one on that basic level, right? Because anyone can be on that sort of a second tier, if not almost on driving towards the third tier. But if we look into that second tier is the one, let's use the word aspiring taxpayers, right? And these aspiring taxpayers are the ones is that they look forward saying that we want to achieve this, we want to do this, we want to do this. And this is where your strategic accountant comes in. Sort of takes a lot more deeper dive and say, not only doing the compliance, we want to get to know you a bit more. And rather than giving you a pro forma advice, rather than giving you a prejudice advice, rather than giving you a documented advice is that we want to really listen to you, understand what your needs are, and let's customize our advice on the basis of what you need, right? As opposed to giving a pre-solution as such. So that's sort of your second tier of the advisor. Then when you say high net wealth individual, is that we very blessed that we look after a number of very large families and very large wealthy families. They've got a lot deeper needs. So those two needs are there. You got to do the compliance, and they're always in different level of statutory scrutiny. So you got to do it so well that anything that there is a query, they're always sort of being safe. So that safety and that trust is quite fundamental, but it's almost being given, right? So that by itself doesn't go into that third level. That strategy is also being given. That by itself also doesn't go into this third level. The third level comes in where you become a lot more personal. And this is where your ultimate care. So it's not only listening to the client, it's really listening to really understand the client, not through one generation, through many generations as success. So that bit of real personal care and the time is what they're after. Now, from our practice side of it, we sort of say that, well, you should not be waiting to go into that third tier to get that care and that personal touch. How do we bring that back into almost that second tier? And how do we almost eliminate that first tier where we sort of say that no one is as being the compliance and everyone is aspiring, either they're reached or they're in the journey. And all of those people that we need to have the care, we need to have that support, and we need to really listen. So we are far beyond than just the compliance.
Okay. So that's all really good, Munzurul. So let's maybe use some examples.
Sure.
I mean, obviously from what you're telling me, the default for you guys, you start from the middle tier. You be strategic, and then you go to the really, high value sort of services. So like say the basic tier, would you call that, someone who you can go to in the local shopping mall and get your accounting done for, $80 sort of scenario. And they just cross-checked everything you're doing, make sure you're not like claiming ridiculous things, right? Okay. And I think that's the kind of thing where a lot of people can actually file their own taxes if they're really, really simple. So that's just having an accountant with an eye for numbers to double check everything. All right. So the second one is where I think a lot of doctors, if we go to an accounting firm of whatever size, there will be a bit of strategy in it, but obviously it's depending on where you are and what sort of services you need and how far you go along that you get the additional stuff, or you require the additional stuff. If someone were to go to you as a customer, and what is sort of like the default is that we go in strategic from the get-go and plan for the future. Is that the...
That's right. Everything what we do in our practice is that everything is a strategic. Nothing is compliance, in the sense that compliance is already being given. And everything is a strategic, and everything what we do is a relationship based. Everything what we do is that we do it with a very long-term view. Anyone who comes into us as a prospective new client, we say that, B, how do we service you for the next 30 years? To us, we've created that 30 years plan, which is such a long period of time that it almost goes through the generation, that you almost service through the generation, and maybe even the service provider is through the generation. And when it is such a long period of time, 30 years, you can't afford to make any short-term decision. It's always looking into the long term. So what we do is that when someone comes over to our office, first thing which we do is that we say that we'll subdivide the first meeting into 3 different segments. We'll leave the first meeting as an obligation free, so there is no cost involved. At the end of this first meeting, we'll give you some fixed cost. We always go with fixed cost to the best of our abilities, right? And then we say that in the first meeting, while we leave that as an obligation free, we subdivide that into 3 components. First component is a bit of fact finding. Then the second component is a bit of a soul searching. And the third component is where we put our brains together and say that, well, this is where you are with the fact finding. This is where you wish to be with your goals and objectives. What is the gap? and what are some of the possible solutions behind it. So it's not a financial planning at all. We are an accountant. We look through the numbers and pros and cons of the decision. We leave that advice 100% with the client as such. So what we do is that we sit down, we ask the question, tell us a bit more in terms of which area that is specialized in the medical field. Tell us a bit more in terms of your income side of it, single, married, age bracket, dependent kids, all those basic things, right? Then we go a little bit deeper saying that, all right, let's understand some of your asset base. So what's the market value of your principal place of residence? What are the value of a couple of investment properties that you have? Which name do you have those investment properties? Are they sitting on individual? Are they sitting on trust? How are they sitting? Tell us a bit more in terms of some of the liquid asset that perhaps you have, your savings, your shares, managed funds, and then sort of other bit of the investments, cryptocurrency. Then we sort of say, all right, tell us a bit more in terms of super. How much do you have in your superannuation, right? All those sort of facts and figures we get, we ask the question that tell us a bit more in terms of your overseas assets and liabilities. Do you have any, right? Is there any other contingent liability? Sometimes a couple may have a liability saying, well, we need to look after our parents. We need to do a sponsorship with our parents. Is there any family contingent liability? So it's really, truly get to know the client. So that's our step 1, which is our listening session. Our step 2 is also our listening session, is to say, all right, B, we understand this is where we are. Tell us what you wish to do. And this is where we hear all the crazy things, right? I'm 57 years old. I'm sort of quite far away. I want to retire in 2 years. I want to do that. I want to do this. I want to travel around the world. I want to do all of those. We listen to all of those and we write down all of those. And then we take a step back. We say, okay, all good. Accountant is never judgmental. We are facts and figures and objectives and number based. So you want all of those things to happen, which is all good. How about we quantify some of those? So for you to retire at a point of time, you tell me what level of the income that you need. I can't tell, I'm an accountant, but I want to know from your point of view, what's your view? And the client may say, well, we need this amount of the retirement income. We may say, okay, so for you to go into the overseas, for you to do this, let's create a bit of budget. What is the level of the expenses that we need to maintain the lifestyle now and maintain the lifestyle that we wish to? Then we sort of say, okay, let's take a step back even further. So we know this is what your asset is. Let's quantify out of those assets, what is your passive income as such? This is now assuming that you don't have any active income in terms of retirement. What is your passive income and where do you wish to be? What is the gap? So our role is to keep doing those maths and the exercise, facts and figures, right? For you to reach into that retirement based on those numbers, that's what you need. This is where you are. What is the gap? And very often, when the client sort of understands that gap, that by itself is quite a bit of a journey being journeyed, in the sense that how do I go to an ultimate destination if I don't know what the gap is? How do I go to an ultimate destination if I don't know how far I am? The pathway, you will find a way. We find a way, the pathway. It's not so much the pathway, right? It's all knowing what the gap is. That's our role. Our role is to do that maths, show you the pathway, and then we take a step back and we sort of say that, well, tell us how do you wish to go into that pathway. So we understand this is where you are now. This is where you wish to be. Tell us what's the pathway. And this is where the clients may sort of say that, well, we want to have investment through properties. The client may say, we want to have investment through shares. And based on what the client needs, we direct them back to the appropriate person. Someone who may be saying that all I want to do is to invest in shares. I'm not into the property investment at all. This is where we say, all right, you've got your financial planning team in IFT, and we send that to the financial planning team. Say, sit down and have a chat with Roger, right, in terms of the financial planning. Someone may say, probably not the shares and managed funds at this stage. We want to buy properties, right? And okay, so what properties do you want to buy? Look, we're sort of thinking in between residential, commercial, both, and we're not sure. So we sort of say, all right, so B has these buyer's agents, and maybe sit down with the buyer's agents so you can explore some of the options. So there are buyer's agents who specialize in commercial, and you've got the residential. You sit down, but you can't do any of those residential and commercial unless and until you've got a loan approval. So this is why we
And then you go to the brokers.
That's right. This is where we sort of say that you go to the broker, right? And sit down with the broker, understand what your serviceability is. Now, our role is that we're not specialized into any of those other fields. We're not a financial planner. We're not a mortgage broker. We're not a lawyer. We're not a buyer's agent. We're not any of those, me personally. But at the same time, one assumes that I need to have enough level of knowledge.
Of all of them.
So all of them. So I can sort of, one, identify, I suppose, an opportunity for a client and match it. To give you as an example is that in the world of finance, when we look through the mortgage side of it, it's complex, right? So you look into many things in terms of what level of loans that you have, what are the personal loans, credit cards, do you have extra expenses for your kids going to the private school, what is your living expenses, lots of things comes into account, right? But at a very high level, very often the bank goes into a 5 times multiplier, right? They call this the DTI, debt to income ratio. And that 5 times multiplier effectively at a very high level. This is not the ground rule. Each bank is different. But this gives a bit of a basic back of the envelope sort of a math. So 5 times DTI means that I add away all the income and I sort of say that, well, if I do the multiplication of 5 times, let's say I reach into 2 mil and you're only sitting about 700,000 mortgage. So it seems that there is quite a bit of prospects, right? Or if I reach into 2 and you're already sitting about 2.5, then we sort of say, well, this is where you might just need to go a little bit deeper, whether it's second tier, whether it's other practice. So that bit of that fundamental knowledge gives quite handy in terms of asking that conversation, beginning that conversation, empower the client with that bit of the knowledge and say, sit down with L&L, when you sit down with the mortgage side of it, explore all of those questions and see what are the options.
Yeah, and absolutely. And it's often what I've learned from this process in working with all of the service providers is that there's often things that you go together with someone else. For example, you're talking about commercial property, then you need to get the financing. You need to know the kind of financing you need to be able to afford the property, how much deposit you need. So it's often a dual process happening at the same time.
Absolutely. Absolutely. And to give an example on the dual process, right? So let's just say client sort of says that, Munzurul, I want to buy a commercial property as such, right? How do you wish to buy that commercial property, right? So there is a way, as an example, is that you can do a lease stock. And lease stock means that it becomes a self-sustaining trust and or the corporate entity. And as long as your serviceability works on the basis of actually having a lease and the lease covers that level of the rental. Now, as a basic rule of thumb, it covers about 65%. It does about 70% in some exception basis. We need to know that, right? And where it comes a dual process is that when we send it back to the mortgage broking side of it, it very often comes back to us saying that, well, we need that structure. Or it could be that the client sort of makes a decision that, well, we don't need to go lease stock, and because we've got quite a bit of this revenue, right, and quite a bit of that equity that we have, that we don't need this to be self-sustaining, and we don't want to do it on a separate trust. We want to use the existing trust, right? And all of those answers are right answer depending on what the client wishes.
Personal circumstance and also what they want to do as well.
Absolutely.
Yeah. So I've come across a couple of cases where it's a lot easier when all the options are open. But only when 1 or 2 options are open, it's so good to have the people talking to each other.
Absolutely. And you know what we do, and not so much as an exception, but we do that when the matter become big complex, is that very often what I do is that I encourage 2 or 3 professionals all come into one meeting. And good Lord, the client loves it, right? So the client sitting in the middle, let's say from our point of view, we're sitting as a accountant and strategist. We've got the mortgage broker sitting in there. Ideally, we've got the buyer's agent sitting in there as well. So all of a sudden, what the client is doing is the client is bouncing off the ideas, right? Okay, I want to do this, right? Start with the mortgage broker. Can I afford to? Mortgage broker said, all right, based on this, we can afford this. Goes back to the buyer's agent. All right, based on this, that we can afford, i.e., this is our budget. What are the areas that we can buy? Buyer's agent says it, comes back to the accountant, right? What are the structure that we should be doing? Is it joint tenancy, tenants in common, a structure, trust, superannuation fund? How do we do it? Each has got pros and cons, right? And I might sort of go through and say that, well, based on this is that we can potentially do on trust. And then mortgage broker may come in and say, well, there is a price difference. If we do it on the trust, it gets this. If If you do it on individual, it gets this. But the mortgage broker may say that, well, if you do it on trust, you may have this much additional level of serviceability. So what it does is that everything becomes a balance. There is no one decision.
Yeah.
You sort of decide in between that price, in between that location, in between that structure, in between that longer term risk mitigation, succession planning, retirement planning. You sort of almost mend all of those together, saying that how do we give you the best advice that we can in the balance.
And it's a very sort of collaborative sort of effort.
Absolutely.
And there's checks and balances across everything.
Absolutely.
Yeah.
Absolutely. And we sort of, when we go to this sort of meetings, is the beauty of this meetings is that I sort of learn from the other professional from this meeting as well. The client, I learn from the client as well, and the client gets value, right?
Oh,
Real value,
yeah.
because we don't go with a pre-solution. We sort of go of listening to the client. So again, we do that same exercise. This is what you are. This is what you wish to be. And then we sort of brainstorm quite a bit in terms of what we can do.
Absolutely. And so it becomes, as I said, it becomes this collaborative thing where everyone comes with the pros and cons of each different thing based on your individual circumstance.
That's right.
And what you often hear or you see other places happens is that, for example, if you buy off the plan, that sort of thing, you have one person driving it and then everyone else just facilitates that same plan.
Yes.
And sometimes it's not to the, or to the detriment of the customer. And, we see that not, infrequently in the marketplace. And so it's always good to have people that you can trust that can also sort of counterbalance one or another, and that sort of
absolutely trust and experience, right? And the reason why the experience comes in is that this is where your team is that every single member they're all property investors on their own, right? They all have some shares and managed funds, so they all do a whole lot of things, right? And they're all being quite a beat on the market for many years. And none of those members are just the other day. When I was counting my years, and I was like, good Lord, I've 30 years as an accountant. I'm not young anymore, right?
Yeah. So, you're amazed at how fast that flies, right? Time
30
flies.
years as an accountant, right?
Yeah.
And then I was like, good Lord, I don't know whether I want to share this statistics very often, but that experience comes in, right? I'm 25 years into property investments. All the way back from 1999 that I bought my very first property, and 2001 onward, I bought property every year. That experience, and that's where that value comes in, is that practical learning that we share.
Yeah, absolutely. And so because you get very strategic about things, there is a bit of blurring between the boundaries of, what is actually accounting advice, what is financial advice, and and you often see that financial planners and financial advisors will also advise on tax planning perspectives. But obviously they send it back to the accountant to do all the things. So it's like, where is this sort of
And we do it exactly
demarcation?
this. Absolutely. And we do it absolutely exactly this. We very openly sort of say, we as an accountant, our roles are facts and numbers. Our roles are to give you the pros and cons on the basis of the facts and numbers. So a purely factual sort of basis on the numbers. But we are not, number one, we are not making decision on behalf of you as a client. We can't. And number two, we're not even recommending you a decision. So even that recommendation is not our role. Of course, we can't make the decision with yourself. Our role is just to purely look through, be the analytic. We are more the information provider.
So you provide the options for people.
We provide the options.
Say, these are the options that's available to you. And you need to go find someone to decide on that.
That's right. On the basis of, facts and figures. And then we've got in-house financial planners, right? Roger as an example, that Roger does SOA, statement of advice. This is where Roger sort of says, all right, I'm going to take some of those facts and figures from Munzurul. I'll do my own sort of a cross-check to see whether they're right. I might sort of deepen this. I might sort of extend this. So Roger does what he does, and Roger comes back with a proper level of advice. Now, in many cases, the client needs it. Many cases, client sort of says that at this stage one, that is the facts and figures are what we are after. That's our role. So we very clearly, we say we're not financial planners. Yes, I've got financial planners who work with myself, Roger, many other financial planners that I work, but I personally am not a financial planner. I can't give you legal advice. I can't give you credit advice. I can't give you buyer's agency advice. None of those. We stay as an accountant, but we prompted in terms of some of the options, and we take them to the expert.
When you get this sort of prompting that you need to do every now and then, you do need to sort of follow quite closely with what the clients are doing, where they are in life. And, obviously with every year you have a yearly tax return, which is the opportunity to do
so
that.
we're very hands-on, and we are equally very hands-off. And very hands-on in the sense is that we go deep into try to listen to the client. I think that's the bit, right? Very often we don't, as a professional, whether we listen enough. And very often we listen to give a solution as opposed to listening to understand. And there is a difference of listening to understand as opposed to giving a solution. Solution will come in naturally over a period of time. It's all about understanding. And deeper we understand, we'll find a solution. Client, they themselves find a solution very often when we clarify that bit of the understanding, right? So that sort of is sort of our role in terms of going there. So this is where we are hands-on, where we also become hands-off in the sense that we're very mindful that we also don't become intrusive in the sense that it is client's decision and individual circumstances are different, and everyone has their own personal circumstances, their own prejudice, their own matters that perhaps even we as an accountant, we don't know. I've seen a number of people that they would never buy their own home, principal place of residence, unless and until they buy a whole bunch of investment properties. They give a whole lot of logic. And I've got many clients who would never do it this way. They would always buy their home first and only then do the investment property. And, I can give the arguments on both sides.
Yes,
and both sides has strong arguments, but it's not so much whether one is right than other. It's what is right to you on your circumstances. On the similar note, right? Do you want to buy residential? Do you want to buy commercial? Do you want to buy regional? Do you want to buy suburban? Do you want to build and develop and grow? Do you want to build and manufacture? Do you want to build and keep it? Do you want to just buy it and keep it? All of those different strategies that people sort of come up with different strategies, right? Location, do we buy here or there? We sort of say that all of those are right. What is right to you? Yes, you can take a bit more deeper professional advice from a buyer's agent as an example in terms of the location side of it. But at the end, go with what you need. We always come back to the goals and objectives, the SMART goals. We always refer back to it, saying that what are the goals that you created in day one? You're specific, measurable, achievable, realistic, timely. And what are the goals that you created on day one? And the goals changes along the way. That's fine. But we stay as objective as we can. You establish 7 different goals for you to achieve over a period of 2 years. And he said out of the 7, we would be achieving 3 in year 1. How are we tracking with the goals? So we directed back on the goal. Sometimes we may challenge the client a bit and say that, are we imaginative enough? Are we, I suppose, open enough? Are we ambitious enough? We might challenge a bit, right? A little bit of sort of prompt that we do.
That's interesting because I don't think a lot of accountants do that.
Now we challenge a bit, right? And we do because we sort of say that, okay, I know you want to do this. And I know your risk profile appears to be this. That's fine. That's the right answer. However, is that on the basis of the regulation, you can do that and that and that. Now, not so much advising you to do all of those, but for you to be aware that that world is a possibility. Is a possibility. And I think as a fact provider is that we need to provide those facts to the clients. But we stay there. Once we provide this, then we sort of say, you make an informed decision as you wish. I've got clients who would only buy one property every 3 years, 5 years, 7 years. And I've got clients who would be buying 15, 17 properties per year, right? I've got clients who would only buy one property per trust. I've got client who would never have a trust and everything is being bought on individual name. I've got client who would have 30 odd properties on each trust. And I've got client who would never have more than one property on each trust. And all of those variation and much more, they're all correct in their own way. So as long as we stay with the goal, it's not about the peer group pressure. It's not about working with the Jones. It's about just staying with your goal and stay true to your goal. Then success happens.
Yeah, beautiful. And I think now we've sort of touched the middle level, right? So we still got that high end level to talk about, which is probably something that we can all aspire to. And I guess the concept of, family wealth and, this label family office
Yes.
comes into the idea, and
Yes.
As an accountant, you often assist a multi-generation family
Yes.
into their next step, and especially after you know
Yes.
them for a decade or two.
That's right.
The kids will be older and they have their own thing, and you're advising all that. Tell
Yeah.
us how the role as an accountant sort of shifts a bit in that sort of tier of service.
We speak about the board of directors. And very often what we do on a family office is that we create a family board. So this is an internal board. We create a charter of a family board. So it's exactly the same on the business world, but we do it in that very large family world. And that charter means is that, all right, this is the gentleman who's the grandfather gentleman, let's say, who sort of is the founder, and he sort of built it and established it. He's got those kids and he's got those lots of grandkids and he's got all of those, right? This is the gentleman who sort of comes in and says that, well, that's the charter. That's the protocol in terms of that family business as such, which is a mega business in the open world, but it's a family business, right? Because it has started on this, and the charter can go as detailed or as less specific as it needs to. It could be as such, saying that these are the attributes that we are after for someone to be the lead. These are the kids that I have. And at this stage, I'm thinking this is the son, this is the daughter who would be taking the reign.
it over. Yeah.
And I think over a period of time, these are the grandkids that I'm sort of saying, these are the grandkids that I'm sort of earmarking. It's actually no different to a very large organization that you choose your successor. And with a very large, this family offices, they do it internally within the family as well. So we establish this, right? We establish this charter, we establish this protocol. Then what we do is that we, again, listen to them quite a bit. We go a lot deeper. This is where your accountant's role become so much more deeper. Very often we sit down and we say, good Lord, I'm acting as a psychologist, right? That I'm listening to that person, right?
Yeah.
Good Lord, I'm solving the family issues. I'm solving these kids' issues. I'm solving these issues, right? Because see, we speak about the doctor side of it and we speak say depression as an example. In a very large family, you've got mega wealth, right? But very often it can also be a very lonely journey. And various different members, it can be very lonely journey. It can have its own sense of brutality, where you sort of say that, well, it's family, right? So it's a safe zone. But if you sort of start putting in the charter and the rules and regulation and the protocol and say that survival of the fittest, is it really sort of that in there, right? Now, this is where our role comes in. Says that, okay, we do that because we sort of still want the collective goodness, but at the same time, it doesn't mean that the individuality is not being managed and respected. There is a time and a space for everyone. And that's where your maturity comes in, your wisdom comes in, your experience comes in. So that family office level, all the level of the experience is being expected. We already got it. Everyone expected, right? All the level of the cares and attention, it's being expected. But what makes someone very good as opposed to someone absolutely extraordinary? And that sort of a gap of how are you very good as a professional as opposed to extraordinary is, again, just purely listening to the client matters and listening to the client matters from their shoes. Sort of almost close your eyes and say, I want to be in your shoe, to the best of what I can, and what is the right decision on your shoe. And at that family office, it's very important to, while we say yes, also to learn how to say no. In the sense that when it gets outside your range of sort of your skill, you sort of say, well, bring in someone else. So I'm not, as one person, expected to know everything. Right. I'm as a one person perhaps expected to stay as a conduit where I bring in a lot of advisor, but I'm not necessarily expected to know everything. So it's sometime a no is a good service as opposed to a bad service, right? You don't want to be overtaking it and where the delivery is not there. Of course, the confidentiality at that level is quite paramount.
It's paramount, yeah.
Right? Quite paramount, right? The privacy is quite paramount, right? It's just spending time is quite paramount in there as well. And while we do the business plan of the family office, you almost need need to do the individual business plan for all individual members.
Of the individual members.
And then you sort of bring them in.
Families.
Right.
Yeah.
And you look back, right? You look back to all the larger family, you look back Bill Gates and you look at Warren Buffett and many of those families, and you say that they're sort of, in many ways, of course, they're very special, but in many ways, they are like any other families. They've got their challenges, they've got their win, they've got their sorrows, they've got their joy. And a family accountant in there is that how do you become part of that journey on an ongoing basis? How do you become part of that family, so to speak, right? So you take away the whole funding, you take away that whole money thing, you say that set aside all the funding and money and everything else. It's all about contributing. We do that, then you build a relationship, things happen.
I know we just dive directly into family office, but we forgot to actually define what that is, because I think for a lot of people, it's this nebulous idea.
Sure.
Is there a particular structure? Is there a particular agreement? You said there's a charter.
Look, I mean, is there a science of what defines a sort of a right family office? There is no science, right? But if you look back to some of the bigger banks, they sort of tend to say is that if you've got about $20 million net asset or $25 million net asset, then perhaps you are at that beginning of that sort of the family office, right? And that goes many multitude of billions, right? So it goes rather quickly, very high, and that's what it is. And in between different layers of that family office, your needs could be very different, right? So someone could be that sort of say 20, 30, 40 odd million as a family on their own, but they're such a young, progressive family that you sort of see a whole lot of things to happen over a period of time. Then you work with them, right? And some could be, let's say, quite a bit higher, but it could be a lot more matured family, right? And their needs could be a lot more succession planning as such.
Yeah.
So that's what the family office, right? There's no one definition as such, but the banks tend to sort of define around the sort of a 20, 25 million is a start.
It's almost like a collection of people that are in a family that agree to a common goal.
That's right.
It's not a particular structure or anything, right? Yeah.
And then led by, let's say, the elder.
Yeah.
And the elders, so to speak, is being led, right? And this is where the wisdom, this is where everything sort of comes in. And to make sure that it's being protected, right?
Yeah.
Because the family, as we appreciate, is that as it starts to become bigger, is that, of course, they've got different level of views and perhaps different level of ethics and values. It sort of all comes in, which is understandable, right? Because different layers of experience that we bring in. How do we nurture that individuality at the same time we cherish the, I suppose, the conduit, so to speak?
It's interesting you mentioned that, because yesterday I just got out of dinner with one of my very, very dear friends that I've known since high school. And I think he and his brother had always had issues, because he's the elder and the brother's the younger one by a number of years. And they're both in sort of contention to become CEO of this family business.
Right.
And lots of problems for multiple years. And then finally, one day they sat down and say, you know what, you deserve this.
Good.
And I guess sometimes that's also comes to light in a lot of these sort of big families and especially family businesses, I guess. Yeah.
And then, from an advisor's point of view, is that it's sort of quite fulfilling as well, right? Because you are genuinely helping families. And when we say that help is that everyone needs help in different ways. It's not so much that we only need the money, right? When you have all of those money, you need on different ways, right? And sometimes some of those very elderly people, they just need time to for someone to listen to them and just spending that time so they can have a conversation behind it. And sometimes they're not necessarily asking for a solution from you, but they just need someone to bounce it off. So that they can sort of clarify their decision on their own, in their own mind, right? All of those are the responsibilities of a right strategic accountant. But equally, the right strategic accountant's role is the protection of that family office, right? Because those family office very often, as definition, they're wealthy, is that very often there's quite a bit of interest. Now, where that comes in, B, is that I look back into the doctors and I sort of say that, well, if I look through the trajectory of the doctors, right? So generally speaking, they start a bit late because the education is much longer. And they sort of, when they start, many of their peers, they're probably already down 2, 3, 4, 5 years. They start a bit low, but they go rather quick, right? And then I suppose there are choices, right? Do you want to stay into one stream? Do you want to go into bigger stream? Do you want to go into this specialization? That by itself gives a newer level of income and the wealth. Then you've got more choice, right? To go to the next level, do you want to become an entrepreneur on your own or stay as that sort of a remunerated base role? And both is fine, right? But if you go into that entrepreneur model, is that again, that need sort of becomes a bit more. Do you become an investor? Do you become a massive investor, right? So if I look back to my doctors client group, is that I've got doctors in all angles. I've got doctors who are literally right at the beginning. Yeah. These are trainee doctors, intern, and right at the beginning, right? And then I've got lots of doctors who are sort of right in the middle. And I've got lots of doctors who's got a very big family wealth, right? Very, very, very big.
I mean, they could be
wealth.
that one piece that are coming in the middle, right?
Yeah. And all of those clients in various shape or form is their strategic advice is what we need. Those bit of, all the sort of the compliance needs. Is that deductible? Can I claim this? Can I do this? You can do a Google search and you can find it.
Yeah.
And you would get a very, very, very close right answer.
Yeah.
Yes, if you're not sure, you can jump back into the ATO website. You can do a bit of a research. Now, it doesn't mean that there is not an accountant's need. There is an accountant's need. Still, there is a need. But the need, as the time progresses, started to become more and more and more strategic. I mean, that whole technology that we haven't touched it.
I mean, using the large language models to just search for your advice,
all ground, right? All ground.
That's going nuts.
Right. The lawyers, as an example, is that I've got this very large lawyer practice that we sort of work through. Their staff level dropped quite a bit. Why? Because many of those initial contract reading, you just run that through with the chat GPT. That's the initial reading is being done, and you've got about 9 out of 10 of the matters already being identified, right? So about 70-80% of the work is being done. When we look through from our accountant side of it is now we can download all of those bank statements directly to Xero. Xero does the financial accounts by itself. Financial accounts does the tax return by itself. Tax return does the work paper by itself. So the first time we pick it up in an ideal world is that all of those being drafted. So all this compliance work, someone sitting around and doing that sort of a data entry, that's sort of done. It sort of now gets done by technology. So again, it shows while we speak about a strategic accountant, there is almost no other way of not being a strategic accountant.
I see. That's very insightful. The other reason I brought up this family office thing is because a lot of doctors in sort of the Facebook generation who, are listening or watching this podcast, engaging with us on our Investing for Doctors group, tend to be sort of in the middle age category, or younger or earlier in their career.
Sure.
And as I think about sort of myself, my parents are getting old, they have things that need to be sorted out and passed on and all those sort of things. Like, how often do you get into the situation where your clients might be saying, hey, Munzurul, my parents need this and this and this.
Yes.
Hey, can you help them? Sort this stuff out.
Very good question, mate. Very good question. Very often. Very, very often. A lot more often than being rare.
Yeah.
Right? A lot more often than being rare, right? Because once you build that trusted relationship with the doctors and the clients as such, right? And assuming that, yes, we provide the right level of service, the quality is there, assurance is there, accuracy is there, strategic mind is there, and care is there, and the relationship-based longer term, all of those attributes are there. Then it's only natural is to say, well, if my parents are not receiving it from someone else, why would I not extend that to the parents level, right? And the second comment is that very often those parents' assets comes back to them, right?
That's right.
And it's also good of saying that, yes, we're receiving all those different level of assets, either as a gift or an inheritance as such. But if you don't receive it in the right way, your tax ramification could be significant. So we very often get involved with the parents level, right? My parents are getting a bit older and they're right in the retirement, and they seem to be a little bit cash strapped at the moment. They've got a whole bunch of assets, but a little bit of cash strap. Can you please look into it and see what are the options available? My parents want to hand over this asset as part of the will. Do you want your team to get involved in terms of review of the will? Is it coming in the right way, in our hand, in the right structure, and the tax side of it, right? My parents are getting different level of pension payments and perhaps they're not getting all the pension payments and the benefits. Can you have a look into it? What are the different options, right? So we get very heavily involved on that sort of the wider family level. Because if we look back, B, is that we've got a quite significant client group, but I sort of look back and said that we've never done any marketing. We do a bit of podcast here and there, but we don't really do a marketing. So every one of our client, literally every one of our client is a client of word of mouth. So they get us very heavily involved. And it's amazing because it's almost your service needs to be customized on that two generation. So the parents' generation, the service could be quite a bit different in the sense that based on what their needs
retirement planning,
right?
Succession planning,
that's right.
Cash flow and all
that's
of those
right.
things.
Their plan may not be that we want to buy a lot more investment and acquisition, and so they're in that consolidation or retirement. Whereas in this side, when the doctors sort of bring it in, they could be quite assertively on the accumulation stage, right? So you've got to customize again your advice in between both group, and we get very heavily involved.
Okay, now I'm going to ask on the flip side, because as you go with the family for 20, 30 years, you'll be going one generation, two generations.
Yes.
But at some stage, you got to pass it. You have to have a succession plan as well. And to then eventually get these clients onto someone younger and, within the accounting business. How do you view that? Because it's such deeply personal of link with your clients. I mean, you probably have clients that you've had for decades, right?
Yes.
How does that work from, the accounting side?
Good question. There is a science and there is an art to it, right? And either way, it's very hard. And whether you use the science, whether you use the art. And the science to use it is that you start with more than one partner to start with. And whether the relationship can be multitude relationship to start with, right? There could be a lead relationship, but there could be a supporting relationship from day one. So when the lead relationship perhaps is not there, one of the supporting relationship becomes the lead relationship, right? So the supporting relationship, the relationship may not be as deep, but at least there are some relationship. So that's the science bit, right? And the art bit comes in is that depending on what the client needs is that we can get more people being engaged. Now, where we support to all of our clients is that we say that it's not a one-man band, right? I mean, our practice, KHI Partners, is 25 partners. We've got about 140 other staff members. And all those different partners is that there are a number of partners from KPMG, PwC, Deloitte. So we've seen the big world, right? So you get very strong capability within the group. Nafis, as an example, that works very, very strongly with myself, with all doctors, right? So whenever we meet any new doctors, is that whenever we meet, first meeting, Nafis and I, we always go in the first meeting. And so we always go in the first meeting. So from a doctor's point of view, they've got two partners, two relationship in day one. And we sort of identify what our roles are. What is Nafis' role is to look after everything on day-to-day matters, all the compliance matters and everything Nafis looks after, tax planning, bit of a strategy, Nafis does all of this. What my role is that everything stops with myself in the sense that all solution, there has to be a solution through myself. So it's about the strategy from my point of view. It's about keeping everything together from my point of view. And it's about for me to get involved whenever I need to get involved as such. Being the spokesperson, being the ultimate accountable person, but at the same time, the person who needs to come up with a solution. So it's more sort of working in and working on. Nafis, whether he's sort of a bit more on working in at this stage, but my role truly is working on. But we take turn, right? Yeah. Very often Nafis may come in and Nafis may have done so much, then I'll sort of look back and say, well, not a whole lot of, from my point of view, to do, right? So that team is very, very important. Very, very important as opposed to just a one person, right? Because you got to have your succession plan.
And very similar in healthcare where the consultant leads and the ultimate responsibility stops with them. And then there's the registrar and then you have the resident intern who, do the day-to-day sort of
the team tasks. And the delegation, right? Yeah. And that's sort of the only way the service can be provided and the quality of the service can be maintained because say, as a one person, irrespective of how much you wish that you do the right thing.
You can't be a one-man consultant,
it's the intention and action, right? And we say intention is quite fundamental. We agree with this, but you still need to have the action. And sometimes you may have the intention, but it's just that action, it just becomes non-practical. So we all need help. So we work together as a team.
It sounds like, you've got a really good setup on, getting doctors and your other clients sort of through that process with a view for, not just the person immediately in front of you, parents, or, perhaps sometimes even siblings. I'm sure you have customers that bring siblings, and also looking after the next generation.
Yeah.
So it's sort of this almost family approach to things. And
one should never become too big to become big. One must always stay humble enough to say that, yes, we come back to the grounded, to stay touched to it. So, all my clients, as an example, they all have my mobile phone. And I was being told, like about 15 years ago, is that you cannot be giving away your mobile phone. That's crazy. You don't do that. And I said, you know what? I will be giving my mobile phone and to all my clients. And they said, no, you can't do that. I was like, well, as long as we create a very logical expectation into both. And my logical expectation with a client is to say, you don't need to call me every day, but you must always call me as a last point of contact. Do all of your research, do everything else. Right at the end, you're signing away that contract, bounce it off with me. But prior to that, there's lots of other people that you can speak. And when client likes it, and from our point of view, is that the benefit is that we've got that assurance with the care that you haven't signed it with the wrong name.
Yeah, beautiful, beautiful. With that, let's end our session today. Thank you so much for coming in.
Thank you, Bi. Thank you.
This podcast is for educational and entertainment purposes only. The information and opinions shared are not intended as personal financial advice. The content presented should not be relied upon for making financial, investment, or other decisions. Listeners are strongly encouraged to seek the advice of qualified financial or legal professionals before making any financial decisions. While we aim to provide valuable and accurate information, we make no guarantees regarding the completeness or accuracy of the content. Any reliance on the information provided is done at your own risk.